Welcome to the Very Good Real Estate Podcast with your host, Derwin Kinston. Think real estate is only for the rich? Think again. Don't know diddly squat about real estate? Even better. Not in line to receive a trust fund? Neither did our guests. Sounds like this podcast is for you. We interview guests that started out just like you. Come learn, build, and grow with the Very Good Real Estate Podcast.
All right, it's your boy, Derwin, and I've got my main guy in here, Chris Maka. We met like a year and a half ago, maybe?
Yeah, it was very happen chance. A very happen chance, yeah.
Absolutely, and we've kind of stayed in touch over the last, 6 months because we were at a meeting in Petersburg because we were both working on projects and we needed the city government to approve something. We ended up being at the same meeting. We sat next to each other, and we reconnected and we had dinner not too long ago. And Chris was kind enough to agree to be on my podcast that I'm starting. So I really appreciate it, man.
Oh, no problem. It's a really cool opportunity just to be able to reach out to a community of folks that are trying to get into real estate and going through that process.
Yeah, so tell me, before you got into real estate, tell me what your background is in education, where you grew up, and how did you know to do real estate? Was it something your parents taught you? Did you see it on TV? Kind of give me how you started doing that.
Oh, well, for me, so my background is I wouldn't say is close to real estate, so it's a little adjacent. So I have the accounting and economics background, and then I also went back and got that computer science. It's called a post-bac program that they offer at VCU. For me, when I moved up to Jersey to take advantage of a job opportunity that I've been trying to get into, because I've been trying to get into IT auditing for a long time. And it was around that time, I want to say it was around my late 20s when I realized, hey, I'm an only child and I really need to be able to provide for my family, both my parents and then my future family, and just really taking that seriously and understanding how am I going to be able to build that basis of income and wealth to be able to take care of those responsibilities.
So when that came to you, when you were thinking, oh, I want to provide for myself, my family in the future, etc., what was your first move? What did you know that you wanted to flip houses? Did you know if you wanted to just own and rent? Like what was your first steps once you realized this is what I want to get into and this is an opportunity I can use to make money?
Yeah. I did not know at all actually what I wanted to do. I just know I needed to find a way to make money while not necessarily having to commit my time 100% to that, since I had a full-time job. So it was just trying to leverage, my mind and my funds to its best and highest purpose, similar to how we do in real estate. So I just happened to be in Jersey, a very competitive real estate market, and Newark, New Jersey specifically, so very close to New York. So there was an informational session essentially with a group called Fortune Builders, and essentially they were saying, "Hey, we're going to be able to teach you how to flip to go from zero to flipper in like 6 months to a year," and really diving into that program and getting acclimated with that is what really took me into real estate. Because the first thing, and I still think one of the most important things for a flipper is being able to assess how much this house, this rehab is going to cost, and being able to do that quickly. So the faster you can do that, the faster you can put in an offer, the faster you put an offer, the faster you can get in front of the seller to maybe get your offer accepted. And that was one of the things that they would teach you and they would provide for you. So it was an invaluable experience, though it came at a cost.
So can you just explain to the audience what Fortune Building is that a website where you take a course? Is it a club in New Jersey? Can you shed a bit of light on that? Just better explain what Fortune Builders is, and then can you explain when you say it came at a cost, can you tell me that story, please?
Oh, well, that bit's literal, but Fortune Builders is, I would say it is a course, and
Yeah.
then it's a situation where they're teaching you everything you need, starting from, hey, how do you spot a good deal? How do you do the comps for a good deal? So taking a look at the subject property and then what's around it. And then how do you reach out to the contractors that you'll need to potentially, um, uh, do the rehab for you? And then also putting together a scope of work, which is so important and can be very daunting, especially your first time through really understanding what needs to go on here outside of the vague, I need a new kitchen, I need a new bathroom, and making sure you're talking to a contractor that is not just trying to make money, if that makes sense, that they know that, hey, this is a new investor, or this is somebody that doesn't necessarily know all the ins and outs, doesn't know that they need to, I don't know, ask for something as small as like the electrical outlets. There are some contractors that you may speak to that, and if you leave it out, even though it seems like common sense, it wasn't on the scope of work, so I'm not going to do it. So you didn't tell me I
Can
needed
I,
to replace the.
I gotta add something in there, Chris.
Oh yeah, go
I
ahead.
think that is so important for people to understand. That is one of the most important lessons I've learned during my flips where, there's guys who'll say, oh, I could do the work for you, but that's not really their skill set, or maybe they're understaffed. So maybe it's a team of two people. And in reality, to do, let's say, a 2,000 square foot house, you really need that contractor could have a staff of two, but he needs to subcontract all that out. But if he's trying to take all the money for himself or trying to do a shiesty job, they're not going to do that, and it's going to take them way longer, and it might draw your cost up. So when Chris says that, really what he's saying is you're looking for you're looking really for the competency of the contractor, because if you fall into the wrong hands with a really bad contractor, you're going to cost your time. So you're going to cost yourself time and money times four.
That's ex-
So I just wanted to add that part into it so it makes sense.
no, that's exactly right. The contractor really can be I think is the most important piece. I mean, as much as that sucks because you're the investor, you're bringing the money, you're kind of together, you're finding a deal. If you have a bad contractor and there's no one there to execute your vision, you're kind of just stuck in the water, rudderless. So,
Absolutely.
yeah, getting that right contractor, making sure that your agreements. One thing that, and you kind of spoke to it. One thing that I've been doing a better job of including in my contract agreements is having that time of delivery. And then if there's no time of delivery, so say we're supposed to be done at the end of the month, if you're on the second day of that next month, it should cost them. So I mean, you agree to that up front, whether it be $150 or $500 a day. But that's something that you should try and include in your agreements with your general contractor. That if we go beyond the date that we both agreed upon when the work should be completed, it's going to start costing you. And then maybe on the flip side, if you finish early, you'll get that same $150 or $500. So trying to is not just necessarily just stick, have a little carrot in there as well.
Absolutely. No, I agree with you 3,000%. I did that after I fired my first contract and I hired the second. We put in
Yeah,
delivery guarantees in the contract, excluding if something was outside of his responsibility, like we're waiting on the electrical work or a permit or something like that.
inspection.
Um, so you go to New Jersey, you do your online course. What happens from there?
So it was pricey. So it was about, I want to say it ran me about
Yeah,
$30,000, and um, I probably didn't
you
actually.
said 30.
I did, yeah, I did say 30. It
Wow.
took me about, yeah, it took me about 2 years to pay that back. And initially, I'd found some really good deals in New Jersey. One really home run deal, actually. It was in Sandy. It was in the Sandy Hook area while I was up in Jersey, and I think it had appraised for 402, and it was another lesson that I had to learn the hard way, where it was a very visceral. Your network can sometimes dictate your net worth. So I found a foreclosed property. It needed probably like 100 grand worth of work, but I got it at such a great price. I think I got it around like 235, 245. I would have been all
Hmm.
in around 335, 345. It appraised for 408 at that time. So it'd been a nice little first deal. I think it would have been a great first deal for me. But I didn't have anybody to co-sign for me, so I lost out on it. And that was just like the very first lesson that let me know it's very important not only to always be raising capital, but to make sure that you're cultivating a group of people around you that when an opportunity presents itself, that you can kind of tag in and team up with or JV with to get it done. And I circled back around to that house to see what it did, and it was right after. It was actually during COVID, so it was right when the market was going crazy. Before COVID, obviously people were really nervous, but towards the end of that year, towards the end of 2020, it ended up selling for something in the neighborhood of like 525 or something like that. So that kind of money would have just like changed my life but yeah, exactly from the get go. So it was a great lesson for me where it was just I really got to do a good job of networking and getting to know the right people so that when this happens again, I have the resources available to me to take advantage of it.
Wow. That's one of the things about real estate. It's very humbling because you'll run into these things where you'll hit a brick wall where you don't have the funds, you didn't get there in time, you couldn't get off work, whatever it is. In your case, you didn't have a cosigner, but there's nothing like having the taste of defeat in your mouth where you
Mm,
go, I'm not going to have that happen to me. But also, the great thing about, even though it was a tragedy on your part, the nice thing about it is you did your homework. You did your homework, and you were able to see that your numbers were right, which is really, even though the deal didn't work out, that's really
right.
important in real estate, knowing that your numbers are right and that you're doing the right math and that you're identifying the right neighborhoods. Because if you're doing that right, even though you didn't get the house, that means you can probably do it on the next deal, which is really great.
Exactly. I think that's a great
And
point and a great takeaway.
yeah, I
Oh no, go
mean,
ahead.
thank you for sharing that. No, and then the next thing is, so after that house, you just dealt with the blow and the frustration of missing out on this great deal, which obviously could have been, that's
Yeah,
change money
that's
right there.
big.
That's changing where you walked
Yeah,
away at that point.
yeah, yeah. I would have
So
stayed
what
home.
happens from there? What do
Uh,
you do from
well,
there?
so COVID hits and I come back to Richmond, Virginia, but now I understand what I need to do. So the first thing I do is I join up with a local RIA. So that's a real estate investment association. And it just so happens that the person who's leading that RIA, Chesterfield RIA, is also a broker. So as soon as I get in back to Richmond, I start studying to get my um, realtor's license here in Virginia, and I joined up with his brokerage. And the great thing about him, his name's Oni. The great thing about Oni is that he's he's kind of an investor first and a realtor second. So he teaches me how to wholesale. He teaches me um, how to look at a property and see its highest and best use, and always be looking for its highest and best use. So maybe it's a duplex, but you look and you see that okay, this is a 2,000 square foot duplex for maybe 300,000 or let's say $200,000, but the single families of the same size are selling for 500,000. So maybe the best thing I can do is transform this duplex into a single family and rehab it in such a way that's a single family and sell it. So you have people that are looking at this product and bidding on it based on the fact that it's a duplex, where if you switch to a single family, it's worth almost double. So he's helping me make sure that I'm looking at things for its highest and best use. And then as well as putting me in contact with contractors and folks that I'll need to on the money side, so lenders or hard money lenders, which can be some of the most important pieces as well. Being able to convince a hard money lender, hey, you can you can buy into me. I'll be able to use this money that you borrow that you let me borrow to finish this project and pay you back in a timely fashion. So it was a great
Yeah.
he's been a great mentor. Yeah.
Can you just kind of walk us through what's the advantage of being a realtor and an investor and how that plays into your math when you're kind of breaking down a project in terms of purchasing and selling and how that kind of plays to your advantage as an investor, being able to represent yourself?
Yeah, so I like it because of speed. I mean, I really saw it when I was in Jersey. I still think it's an advantage here. You can be looking at all times of the hour for deals. You don't really have to. I mean, I'm a bit of a. I don't love asking for help, so maybe that's part of it. Maybe, but I think it can be advantageous because as soon as something pops up on the market, I can reach out to the realtor directly. I can start negotiating with them, and maybe ask them if they're willing to do seller financing, or are there any other terms that the seller is willing to do? Are they willing to hold a note, maybe, or are they willing to JV on this deal? That's one thing that I'm starting to do, especially
Can
in
you
this
explain
market
what
right
all
now.
those terms? Can you explain those terms?
Yeah, yeah. So, seller financing is basically when the seller becomes the bank, and then they'll hold the full note. So, say it's a $200,000 property, they'll hold the full $200,000 note, and you'll just be paying them as opposed to be paying a bank or a hard money lender. Um, I would say that's if you can use that correctly, that can be very advantageous because maybe they'll give you better terms than the bank will. They'll let you just pay principal with no interest. So there's very really good ways you can structure it where it can be advantageous to the buyer. Holding a note might be a situation where um, you want to show the seller that you're serious. So say it is that $200,000 home, you put down 50,000 and they hold 150, so that when you finish and you sell the house, you pay back your hard money lender and you pay back the seller. So that way, you're not paying interest on $150,000 worth of money, and then two, it's a way for you to maybe have a win-win situation where they're asking for a lot, but the numbers make sense when you don't have to pay that extra $10,000 in interest because you're paying money on $200,000 instead of $50,000. So um, there's a lot of ways you can structure a deal to make the numbers make sense. Because obviously, there's no point in doing it if they don't.
Yeah, well, the thing that I love about real estate is you're typically limited to, not typically, you are limited by your imagination and then what the person you're negotiating with agrees to. Um,
Correct.
and I think that's the advantage you have over other investments where you might be restricted, but in this case, it's two people communicating saying, "Hey,
Yeah.
let's break this deal down in this way." And particularly, it's, those avenues of negotiation that we're talking about open up when the seller's in a desperate place, those are my favorite deals to do. And so
Yeah.
just want people to keep that, definitely want people to keep that in mind.
That is 100% right. The desperation piece. I mean, you're coming forward with a solution to their problem. So you're not only helping both sides make money, but you're also really helping somebody in a time of need, whether that be a bankruptcy situation or a foreclosed or soon to be foreclosed property. That you could really be a godsend, to be honest, because if you're helping somebody out in a foreclosed situation, you're saving them from 7 years of a bad credit hit
Hmm.
by their home foreclosed on them. So um, real estate I think is an amazing industry. You're not only doing good for yourself, you can be doing good for the community.
Absolutely, because when you flip a house, you're raising the tax base of the neighborhood, you're changing the neighborhood, you're bringing value to you're literally putting money in everyone's pocket on the block and within the neighborhood, which is astounding. Can you comment on these? Granted, I usually negotiate this down, but when you purchase a house, the seller is paying their agent typically 3% and your agent 3%, and then vice versa when you're selling a house. In terms of when you're the realtor, where's that typical 3% go? Since you're
Well,
representing
as
yourself.
I would say, as it is right now, that is the case. That may change it in the future. I'm sure you're
Yeah.
aware, and your listeners are aware of that big lawsuit with NAR. And there's some huge waves that's causing, as far as perhaps the seller would only be paying 3% for the listing agent, and then the selling agent buyer would need to pay or compensate them for their work. So that might be something that changes, which will put a lot more money in the seller's pocket, because those percentages can add up. 3% to the lister, 3% to the purchaser, 1 or 2 points to the lender. So those really add up really quickly. But I found that money obviously comes back to me as the realtor. Now, what I do with that money, maybe I'll allow me to put a little bit less down towards the down payment that my hard money lender is asking, or I just pocket it and then I'll use it later on in the flip for some materials that we may need. So I find that it can be very helpful, both negotiating, and it helps on a couple different levels.
Yeah.
Whether realtor specific with stats, because we all have stats as far as how quickly you sell a home, how many homes you sell. So it helps you on that side, but then it also helps you very directly with being able to keep that money as opposed to having to have it paid out to a realtor.
Yeah, I just want to comment on that. So this past year, I think I sold in 2023. I think I sold 7 or 8 houses, and
Oh wow!
I literally sold everything. But we'll talk about that later. Um, I negotiated where I always the buyer's agent, I always pay them 2%, and then my agent,
Oh,
I usually pay between 1 and 2%. So depending on who's representing me, what they agree to, like if you have a new agent who's looking for business, or maybe you have a friend who's willing to do it, because being a realtor is not the hardest job in the world, really. Because I mean, particularly if you're dealing with someone who's experienced, you don't have to walk them through anything. It's just really a paperwork game, because you don't have to do anything, because your buyer knows what to do. So you're not really earning anything. So what I do is I try to keep my commissions at 3%. So if you're keeping everything at 3% versus 6%, I mean, depending on how much the deal is, that could be five. That could be easily $3,000 to $5,000 that you're keeping on your books. So it's really important to. Granted, I know those things might change, but for right now, it's a really easy way to telling the realtors, "Hey, I'm paying you this much." And what they can do, turn down money, zero
exactly. I
versus
mean,
earning.
that's very true. I'll stick up for the realtors out there. I will say that if you do have a good realtor, they might be worth their salt, whether it be
They can be.
negotiating.
They
But
can be.
yeah, from a listing perspective, I can definitely see what you're saying. But when you're looking for a good buying agent or selling agent, that can be really helpful, because if they're used to working with investors, they know exactly what to look for, or they may know about off-market deals that are going around the
Yeah.
office before they hit the market. So that can be a great thing, especially for me as a
You're
realtor.
right.
Also, especially for me as a realtor that's also an
Yeah.
investor. Um, Sometimes I have deals that I can't knock down by myself. So, and this is something that might be happening soon. I have uh, a 50 house portfolio I was going to probably talk to you about, where it's
Mhm.
just too big for me to take down by myself. So I'm going to be looking to investors that I know to see if they're interested in JVing, and if the deal makes sense to have a situation where everyone makes money. But those are one of
What's
those
that
things
stand
where,
for?
oh, what does what stand for?
Yeah, the acronym the initials you were giving.
A JV.
Yep.
Oh yeah. So a JV is a joint venture, which is usually done between two parties that are looking to get a deal done, and usually just for that one deal. So it allows you to do one flip and then kind of get your money and go your separate ways, as opposed to making an LLC or some other type of entity or S corp or whatnot entity with that said person, and it kind of being stuck together for tax reasons, and all that other jazz for
Hmm.
the foreseeable future until you dissolve the entity. So it's nice. It's a good way to get one done and kind of go your separate ways and decide if you want to do it again.
Yeah, for sure. Last time we spoke, you were telling me about how, and I might be getting this wrong because it's been, I think it was like 2 months, 2, 3 months since we've had dinner. You were telling
Yeah.
me that you own a single family house in Richmond, and I can't remember. Do you live there or do you not live there?
No, the duplex. The duplex. I know what you're talking about. Um, so
You
I
were
own a
saying that you
duplex.
rent out the individual rooms or something. Yeah.
Correct,
Yeah.
correct. That's correct. And I, some of the older investors that you may speak to, I'm sure they've done the rooming model. And what I've always heard and what they usually tell me is a young man's game, because it can be testing.
Can
Because
you
you
explain what
for
that model is?
yes, yes. So essentially, you'll have a house. You can do it with a single family, but I prefer to do it with a duplex or a multifamily zone dwelling, just for um, risk risk mitigation purposes. So for me, I have this duplex. It's two different units, and originally it was a 2-1, but I was able to split it up into a 4-1 upstairs and a 4-2 downstairs. So that's 4 bedrooms and 1 bath upstairs. And that's 4 bedrooms and 2 baths downstairs. The rooms that have bathrooms obviously command more from the market. Currently, I'm getting 850 from that one room with a bathroom, and then um, for the rest of the rooms, they vary between 750 to 650 on the smaller end, because I do have two pretty small rooms. But essentially, it's a great model, I find, because it mitigates risk in the way that you're not you're not in one property. You don't just have one person. So if that one person stops paying or anything happens to that person, all of a sudden you're not making any money anymore. So in this situation, I have 8 rooms, so I have 8 different people that you're dealing with. So it's that personality. That's the hard work that you're going to have. Just making sure that everyone is vetted correctly and is getting along, most importantly, and clean. But if any, 2 or 3 people stop paying rent, I'm still cash flowing. Obviously not cash flowing as well as I'd like, but um, when everybody is paying, it is just a really good system. It works really well, and people get comfortable. So I a lot of my tenants are older folks that are on fixed income, and I find it can be really helpful for them because they know that the rent's not changing anytime soon. And all their bills are essentially all their home bills are taken care of by this one rent bill, and which is the nice way that having 8 folks in this entire building really offsets the cost. Is that you don't have to they pay that one bill for their rent, and they don't have to worry about utilities, water, gas, and internet. So it's very much a win-win for everybody.
How much? What kind of mortgages you get when you purchase this house?
So actually, this house, I got really fortunate. I'd been watching this
Hmm.
house for a while now, and I was kind of badgering the wholesaler a little bit. So I took over the wholesaler's loan. So I purchased the home for $275,000, and then put another 50 into it. And within, I want to say, about 4 months, it appraised for $406,000. So
Wow.
there's a good bit of equity there, and I think it'll continue to go up. Um, because the area I'm expecting eventually in the future that, and you're familiar with Chamberlain. I know your viewers may not be,
Hmm.
but I'm expecting eventually that the same kind of home valuation that's literally a street behind, where you have half a million and up homes, eventually extends to Chamberlain when they start cleaning it up eventually. And when that happens, Lord knows. But right now it's cash flowing well, so I'm not really worried about that.
What's your mortgage on that property? And oh, wait, actually, I'm
That
sorry. How did you find it? How did you finance the $50,000? Did you just come out of pocket to pay the 50,000, update the house, or did you refinance? What did you do to come up with that 50,000?
I came out of pocket with the 50,000, and then what I did do is then I refied into my personal name, to uh, I didn't get any money back, but to get the hard money lender out. So that brought
Yeah,
my payment down to about 20. My mortgage is about 2,465 a month. That has gone up only due to property taxes, but I think
yeah.
I started off at like 2,200. So property taxes have been aggressive.
Yeah. To kind of explain what a refinance is, the easiest way I could think of to explain it is you can change mortgages like you change your clothes, in
Yeah.
the sense that let's just say you get a mortgage, which is a loan to buy a house. If it's raining, you wear, and it's cold, you might wear a jacket and pants. But let's just say that mortgage isn't working for you because let's say interest rates have gone down or the type of loan that you got is a temporary loan. So because sometimes in real estate you can get a 12-month loan or something really short term, and kind of like
Right.
changing your clothes, you go, this isn't working for me. This is working for the situation. So you will change mortgages, and that is called a refi. Just want to explain that.
Yeah, and that's
And
exactly right.
mhm. And
Oh,
how
go ahead.
much do you make on that house every month?
I want to say about 22 to 23 after the mortgage and utilities, which I know is abnormal, which is the reason I like to do um the rooming. It can be a headache, but for me right now, the cash flow is more than worth it, and it's a model I think I'm going to stick with for the foreseeable future.
Yeah.
And we spoke at our dinner about ADUs, which I think is a really big thing that's really gaining popularity. And in Richmond and a couple other counties in the greater Richmond area in Virginia, counties and cities seem to be warming up to the idea of ADUs to allow folks to age in place. But it can also be used for investment purposes.
Can you? I cannot. I know what an ADU is, but I can't remember for the life of me what that acronym stands for. It's. Do you remember?
Yes, yes, additional dwelling unit. So, for instance, in Richmond, if the lot permits, because there's certain setbacks that you have to abide by. If the lot permits, you can build an ADU that's basically as large as the main building. So, if you have a 2,100 square foot duplex, you could potentially build another 2,100 square foot duplex right behind that one, um, if the lot's large enough.
Got it. Um. See, what is your? Because I think you said you were working on a. Oh, I remember. I'm sorry. For what are the biggest headaches you have doing the model that you have with your duplex, with having so many tenants in one building?
Folks not getting along. That is by far the hardest one. So it might be as simple as, hey, so and so is always messing with the thermostat. To I think the worst scenario I've had was I have one I have one tenant. She's harmless. She's an older lady. About in her late 60s, but she's a little spicy. So I'd gotten an individual, because I work with nonprofits, I'd got an individual to come in who was a younger guy who'd gone through a lot of ups and downs. I would say easily triggered, but he was uh, from he was rough around the edges essentially. So she had popped off to him a little bit and said, "Hey, I'm going to get my son to come and handle you this and the third." And then one thing led to another, and he was pulling out his gun and kind of flashing it and brandishing it towards her because he was taking what she was saying literally instead of as a joke. So there's situations that happen where there's those miscommunications or breaking of personal space where folks don't always make clear their intentions, and it can escalate. So I've had that happen once or twice. So those can be unfortunate calls to get at 11 o'clock or midnight or first thing in the morning at 6. But they're usually far and few between after a while. That is one of the reasons why I do like older folks. They take care of the home. They appreciate the opportunity more, and a lot less complaints, and they'll take care of your property. So I've had some folks that rake the leaves for me, or make sure that the trash is clean, or just keep the house immaculate, just in general. So it's you really got to do a good job of screening your potential tenants. because that will save you a lot of headache and a lot of money.
Before we get into the screening, I just want to point out for a lot of investors, they find the thing that they're into. So, for example, my grandfather is an investor in California, and his favorite thing in the world is Section 8. He loves it because
Oh yeah,
rain or
yeah,
shine, right? Rain or
oh
shine,
yeah,
he knows, listen, he knows the check is coming. Even if the tenant's not paying their part, he knows Uncle Sam is good for it. So for him, that is his thing. The thing that I've been working on more is doing more multifamilies. So that is my thing. I don't even want to own any more single families necessarily. Doesn't mean I won't do it, but it just means that that's the thing that I've been focusing on a lot more heavily than I was when I first started because, like Chris is talking about, it's kind of a back end fail safe. If one side's not paying, you still got the second. The mortgage is still getting paid, and you don't have to come out of your pocket, which is a beautiful thing. So, which obviously kind of saves you as an investor because the worst thing that could happen is the person's not paying,
no,
and now you've got to eat the
yeah,
mortgage, and then you got to pay to get a lawyer to get them out, and then it's a whole thing for several months. But in reality, if you have a duplex or a quad or anything like that, all that stuff
yeah,
kind of naturally backfills in, and you're still winning, which is the most important thing. Even if you're breaking even, it's still money not out of your pocket, so it's
exactly.
still a win regardless. So how do you screen your tenants? How are you finding these people? Where'd you get your contract for? Where do you get your contract language for? Walk me kind of through that.
Yeah. So I screen my tenants. I get them generally through Turbo Tenant, and then Turbo Tenant does a great job of marketing your property. There's like five or six at the very least. I think there's more, but there's five or six different websites that they kind of blast your property out to, and from there, folks really start to reach out and call you, and then I send them through the process of applying through Turbo Tenant, and Turbo Tenant, charges them the $55, and then they do the background and credit check, and it's kind of up to you based on what you see to decide what your criteria is, and then what's okay from a background check perspective. For me, because I have the rooming model, I can't have any violence in the background. So as soon as I see that pop up on the background check, that's an immediate no for me from a tenant perspective. And then as far as from the credit perspective, I'm not worried as much as as long as the source of income is strong. But the credit does the way I use credit is to dictate how large the deposit is. So in Virginia, we're limited to 2 months. I think a lot of other states are moving to that, but we're limited to the 2 months worth of rent as a deposit. So the better the credit score, the lower the deposit is how I kind of work.
Yeah, the one thing I would also stress is this to the audience: when you are whatever your criteria is, you need to stick to it and own it and live by it. Because when you open a door and say, "Hey, I'm Derwin, I'm Chris, please look at my room or my house, etc.," you will get every sad story known to man. Oh, and I will give you an example. I remember I had this beautiful house in Churchill, and someone had come to look at my house. There's this couple, and they were very very nice people. And I asked them, I said, "So are you going to be living together?" Because I was asking because I wanted to send them both the application, and they said, "Oh, just my girlfriend." I said, "Oh, okay. So are you going to be living?" He said, "No, I want to live here." And I said, "You have to fill it out." And he said, "Oh, what had happened was I had murdered somebody and went to jail for like 20 years or something." And that's really tough because you know people will, if you don't ask questions, people will try to get over on you. Or, yeah, I have like 6 evictions. And you're like, 6 evictions? I don't want to be your seventh. But people will literally try to slide that kind of stuff. If you don't ask them or have very rigid structures in terms of following, whatever guidelines for your state are. But you have to
Yep.
ask those questions. You have to stick to it. So, I know there's some investors who say, hey, if you don't have above, if their rule is 650 and you have a 649, they are not renting to you. They don't care if they like you. 650 is that number. You have to follow it because when you don't follow your own rules, that's when you open up yourself to get, as I like to affectionately call it, don't get got. Don't get got
Yeah.
ever. And when you don't follow your rules, that's when you get got the most.
No, that's very true. I have left rooms open and vacant for quite some time just because I haven't found the right tenant. Just sticking to your guns on that. Sometimes you want to let somebody in because they'll pay double, they'll pay the full 2 months and the rent for the month. But I found in the long term it's not worth it. It's not worth it. And as far as like putting my leases together, I've actually based my leases off of my first lease was off of a home that I purchased on my first duplex that I purchased. The previous owner had a very extensive lease. I think it was like 16 pages. So I based a lot of it off of that. But what I've also done as a realtor, I do work with uh, landlords that are trying to fill up their homes. So I generally look through those and see if there's any terms that I don't already have in my lease, and then if so, I'll add it. Otherwise, the lease has been pretty solid, to be honest.
Gotcha. That's excellent. And I know that to go back to the rehab thing, I know you're rehabbing a house in Churchill.
Yeah.
From that standpoint, dealing with the city, doing all these other things, what's some of the most important lessons? Because I know we talked about it a little bit. But what are some of the most important lessons that you would tell someone who wants to flip a house so badly, knows nothing about it? What is some of the most important aspects? If you could narrow it down to, let's say, 5 things that they have to do to make sure that their flip goes well.
5 things. Know what it's zoned for. I know this is a little in the weeds, and it's like you see a house that's a single family, and obviously it must be fine for single families. That may not always be the case. So know what if it's zoned single family or zone multifamily, and whether it's in a historic district, because that can really change things from what how hard is it going to be to get a building permit, what how many hoops are you going to have to jump through, who are you going to have to talk to at the local government level to know to get anything done, because it might be a situation where to even there's certain colors you wouldn't be able to paint your house because you're in a historic zone. So that's one thing to know. um, I would say again, the contractor, just making sure that you've seen the work that this person that you're going to hire has done before. You know that they've done good work. You're able to visit their job sites and know that they keep their job sites clean, and that they finish in a fairly timely manner. I mean, obviously, there's always going to be a delay or a cost overrun. It's never going to be exactly perfect, but to know that that person's responsible and that they do a good job, I think is very key. I think it's very important to have a good realtor. So whether you're going to be marketing that property before it hits the market, or that they have a good network, so they have a good network of other realtors and other agents who are may have buyers that would be looking for your home to purchase, um, funding. So uh, making sure you have some capital on the side, as well as making sure that the hard money lender that you want to speak to um, can fund it fairly quickly, maybe like 3 to 4 weeks, and that you build a good rapport with them so that if this deal goes well, that you can come back to them confidently and let them know, hey, I'm ready to do my second, third, and fourth deal. Are you willing
Mm-hmm.
to fund it? Because we did the first one well and everything went okay with that. So on that lender piece, I think another thing that's important is understanding just how much money you might need. Some lenders don't do more than 70% of the after repair value, or ARV, and that's important to know when you're looking at flips, because sometimes the numbers look good, but then when you start to really break them down, it's really hard to make them work sometimes, when you have a more conservative hard money lender. So you may or may not miss out on a deal unless you have the capital to bring to the table to make up for that, um, you know 5 or 10% to really bring it down to within the parameters of that hard money lender. Um,
Wait, can I
And
interject real quick? I wanted
yes,
to clarify a couple things that you said. You said some fantastic things. First of all, what zoning, because some people may not know what zoning is, because the average person does not pay attention to zoning in their neighborhood. Basically, what that means is every city designates what a house is allowed to be or what a plot of land is allowed to be. So that could be if you're thinking about your own home, you know that your house is an apartment or a single family house or a condo. Your city has said your house can be a single family house, your house can be a condo. But sometimes what happens within zoning is the city will designate a block, an area or a block and say, hey, even though your house is a single family house, your house meets the criteria to be a duplex or a quad because of the size, the whatever the criteria is. It could just be, if you're on 10,000, if you're on 10,000 square foot lot, you can be a quad, something like that. And what Chris means by that is if you're buying a house that's, a complete dump and you want to rehab it, you want to look at the zoning laws to say, oh, it's a single family house, or oh, I can turn this into a duplex. So you want to, in terms of evaluating the highest and best use of your property, the first thing you have to do to be able to do that effectively is know the zoning of your house. Um, the second thing I think you mentioned that I thought was really important was the ARV. So one of the things that I think Chris did an excellent job of stressing throughout our interview, he talked about evaluating a property. Now, very often when we talk about that, we don't really explain what that means to evaluate. And what that means
yeah,
is kind of like when you go on Realtor.com or Zillow, and you check out your favorite neighborhood in whatever city you live in, and you see that, and you know that the best house in your neighborhood goes for $500,000, but you know the worst house that's similar size and very similar attributes is 200,000. Well, if you rehab that house, that means theoretically the ARV of that house, meaning the after value of that house, should be 500,000. So that means you got $300,000 to play with. Um, and really, that's what he's talking about. And that's really, when you're getting your financing, that's what the banks and the hard money lenders care about. They care about the work you're going to do. How much money do we think you can make? Because what they don't want you to do is, they don't want you rehabbing a house that you're not going to make money on, because that means they're not going to make money. So I just wanted to explain that in that way, Chris. So I apologize. Go ahead.
oh, no problem, no problem. I think that was the last one.
Okay.
Just yeah, really drilling in on that ARV and being able to compare it to like kind properties to be able to come up with a number that you're confident with on the back end. So it's not just important to be able to get that good contractor in and be able to figure out, what's a reasonable number that you're not getting beat over the head with from a rehab perspective, but also on that back end of what can I reliably expect to make for this house once it is renovated? Because that number can be difficult. Because generally folks, I know I was taught to look in a mile radius and about the 10 to 20 differential up and down from a square footage perspective. But in some neighborhoods, you're gonna have to do a mile and a half or a quarter mile to really get
Hmm.
good comps what that house will sell for. So yeah, it can be challenging.
For sure. And, I think we've talked about this in our little powwows, that's an issue that I know I've had in Petersburg, where
Yeah,
in Petersburg, Virginia, it's not the most active. I mean, it has an active real estate market, but it doesn't have an active market where people are doing top-notch renovations. So what ends up happening is it really jacks up the ARV, where if you're trying to rehab a house and everyone's doing really crappy renovations just to make an extra 20,000 for themselves versus doing a full rehab where you really should be creating $100,000 in equity. And if the banks are only seeing that 20, that's going to affect your deal when you're trying to do it. And so that sometimes are challenging in those smaller cities where they're not going all out to do a house. So then it affects your job when you're doing it. But let me ask you, I think coming close to the end, Chris, if you had to redo things from, if you could give yourself advice when you were starting out, what would you have done
ooh,
differently?
what would I have done differently? That's a good question. I think I'm not saying I did it things perfectly. I think everyone starts at a different place because I've heard of people having a apartment complex as their first deal. I think I like the way I started. I think I would have spent a little less money
Yeah.
on the fortune builders, to be honest. But what I
Yeah.
got out of that was a yeah. What I got out of that was a cost estimator, which I still use to this day, and it's pretty accurate, to be honest. So it gave me the confidence to really go out there and bid on deals with an idea of how much this is going to cost me and what I'm going to make based on the ARV I'm able to put together. So I did appreciate it from that perspective. But I think starting off with wholesaling, depending on how much capital you have to play with when you first get started, is a great way to really get involved in real estate. And once you get that first wholesale deal, it makes it real, which can be one of those things that can be frustrating at first before you really get a deal done, before you get a flip done. That feeling that I'm not sure I can do this, and I'm not sure the things that I'm hearing online as far as people flipping houses or wholesaling houses, that it's real. So I think wholesaling is a great way for someone with very low capital to dip their feet and get their feet wet in real estate without too much on the line. So I'm
Can you
happy I
explain what
started.
wholesaling is?
So wholesaling essentially is kind of being a market maker. So you'll find a seller
Mm-hmm.
who's in the property in distress, say that you get it under contract, so you're able to negotiate them down and get it under contract for $80,000, and then you find a flipper who's ready to, get the property to where it needs to be, to get it to its highest and best use, and they're willing to give you $100,000 for that same property. So you structure your contract in such a way that they will purchase the home for you, essentially. So they'll pay that $80,000 to the seller, and you'll pocket the $20,000 essentially. So it's a great way to make money, and the what you're really spending is the time to really get the deal done.
Absolutely. I think that's really important. And I think where a lot of people can make money in real estate is kind of seeing those little those opportunities where you can make money where you don't actually have to do work to the property or really much work for yourself. And I think those are, if we can teach people to make money in those key moments without having to really lift a finger, I think that would be really cool.
Yeah, no, I definitely agree.
All right, Chris, thank you so much for your time. I really appreciate it because I know you're a busy guy. I know you got all doing all the things. So thank you so much for taking time out of your busy day to sit sit down with me to ask you all the questions. And I feel like I got to know you a little bit better because some of the things I actually didn't know. So I really appreciate that.
No, man, I appreciate that as well, and no, I didn't mind at all. I think it's a great opportunity to always to talk to you and just give back where I can, because someone had to pour into me for me to be able to get to flipping, wholesaling, and eventually developing.
Yeah, all right. Well, that concludes our interview with the famous, the investor, property manager, realtor, Chris Maka.
Thank you, I appreciate it.
Thank you for joining us today on this episode of the Very Good Real Estate Podcast. We look forward to growing with you on the next episode.